Hi, this is Greg. Welcome to the channel. And in this video, we're going to be talking about how to create wealth after 50. Now, a lot of these principles are universal, and it doesn't matter if you're 20, 30, 40, 50, 60, 70, 80, whatever age you are. These principles will still work for you, but I'm going to be focusing on this video in how to create wealth after 50. Okay, so let's get right into it. Now, a lot of people reach midlife and they reach, the age of 50, 55, even 59, whatever the case may be, and they begin to realize, oh my God, I haven't created any appreciable wealth. All of the work that I've done, all of the savings that I've made, all of the years that I've put in, they just flew by. And here I am, I don't have any appreciable wealth. It's not unusual and it's not uncommon. So in this video, I'm going to talk about 3 basic areas that you can focus on, whether you're in your 50s or even younger, it doesn't matter, all of this is applicable. 3 areas that you can focus on that will help you to increase your wealth going forward. Now, for those of you who are new to the channel, a lot of this will be new, but for those of you who have watched a few of my past videos will realize that I'm a big believer in side hustles. A side hustle is pretty much what you would expect it to be. A side hustle is when you have a full-time job, you're working for somebody else, but you're doing something on the side, either a business on the side or some other way to make money, and it could be multiple ways to make money on the side while you have a full-time job. You'll also know, if you've been watching this channel, that one of my favorite side hustles is real estate. Now, real estate is a great side hustle because you truly can do it in your spare time. You can get started small and you can build it up, and it can be something that can be very rewarding over the long term, and you can get very good at it and make a lot of money. But like everything else, you have to know what you're doing. And as the old saying goes, a fool and his money are soon parted. There are some basic things that you need to know in order to be able to correctly and efficiently invest in real estate. Now, most of you have been watching YouTube. There's a lot of people on YouTube talking about single-family houses and flipping houses and things of this nature. My particular expertise, and also the area that I am interested in, is commercial real estate. Now, commercial real estate involves apartments, retail, industrial, self-storage, office, things of that nature. And the great thing about it is you can start small. And the thing I like particularly about commercial real estate as opposed to single-family houses is that you have more than one unit. I have found in my various business travels and the various things that I've done, you need at least 3 units in order for it to make sense on the commercial side. Now, the thing about real estate that's important for you to understand is there are a number of things about it which make it particularly advantageous to building wealth. One is it's a very inefficient market, okay? And why is this important? This is important because particularly as you're starting out, you'll be flying under the radar screen of the larger investors. You'll be in a market where people are selling properties and buying properties, and you can often get very good deals if you're able to act quickly and you're able to really know what you're doing in terms of value in the market. Right now, at this point in time, is a particularly good time to be starting out in real estate because with the economic downturn that we've been experiencing recently with the pandemic and all that kind of stuff, the market is taking some hits, and there will be a lot of opportunities going forward to pick up properties at very attractive prices. So it's an inefficient market. Now is a very good time to be looking at real estate and learning about it. But probably one of the best things about real estate is it's one of the last true tax shelters. There are a myriad of ways that real estate can shelter taxes, and I'll just mention a couple of them here. First of all, because of depreciation and because of interest expense, you can shelter a lot of the income coming off a property from income tax. In fact, frequently the first few years, maybe the first 5 years that you own a property, you're going to be showing a loss on your tax return, and that loss for tax purposes can be subtracted from ordinary income. Now, there are limits on this, and you should check with your accountant on how this works. I'm not going to start giving accounting advice, but there is the opportunity there to deduct the losses, and they're passive losses, from your ordinary income. Now, this is all done within the context of a situation where you always want to be going into properties where the ending cash flow is positive, so you're getting positive cash flow, but for tax purposes, you're showing a loss. Okay, that's the first advantage. The second advantage is that you can take out your profits in real estate tax-free. And the way you do that is, once you create value in the property, you can refinance the property, take out some of your equity, and the proceeds coming out of that via a debt financing is tax-free to you, completely tax-free. Now, if that wasn't good enough, there's another little jewel here that the tax authorities have given us, and that is a 1031 exchange. And this is something that people have used for hundreds of years, maybe not hundreds of years, but people have used for a long time to defer any kind of taxation on their properties. And the way it works is you basically, when you're ready to sell a property that might have a very low tax basis, meaning that it's fully depreciated, if you were to just sell that property, almost the entire amount of proceeds that you would receive on that property, because the tax basis is very low, you would get taxed on almost all of that gain. Okay, and you don't want to do that, right? So what you do is you essentially sell the property to a trust, and you have a certain period of time to identify the target property. And this is the sale and the purchase is all done through a trust, a 1031 trust, which is set up by the lawyers. And it allows you essentially to sell the property and purchase another property with the proceeds, and it's all done tax-free. Now, this 1031 exchange is kind of complicated. I'm not going to go into it here, but suffice it to say, there is a mechanism whereby you can sell a property that has enormous profits in it tax-free. Now, where else can you do that? I mean, isn't that great? One of the things I wanted to touch upon that I've seen people talk about on YouTube and elsewhere is they compare real estate as an investment to other alternatives like stocks and things of that nature. Real estate, unless you are investing as a uninvolved partner or a passive partner, okay, as a, say, a limited partner where you have no decision rights, you're just investing with somebody else as a passive investor, in that case, it is an investment and you can compare it to stock investing. But however, what I'm recommending that you do is either buy it directly, do the management yourself, or you partner with somebody who's going to do the management and any construction, and you provide the money. Now, when you do it in this way, which is the way most people do real estate, it is not an investment, it is a business. And it's a business just like any other business. You have to manage it. There are problems. It is an active process where you are constantly needing to spend time on it, just like you would in a business. That's why it's called the real estate business. The second area I wanted to talk about is stock investing and all things related to the stock market. Now, most people are familiar with this because I'm assuming that most people that work, have a job and work for somebody else, which is probably most of the people that are watching this video, most people have a 401k or something similar, an IRA or something of that nature. In my mind, the purpose of an IRA or a 401k is to give you permanent exposure to the stock market over a long period of time. And if you watched other videos that I have done on this channel, you will know that I believe that a certain percentage of your net worth should be permanently exposed to the stock market over the long term. Now, there are two ways that you can do this. One is with your company, which in most cases there's a selection of funds that you can put it into, usually mutual funds. This is usually the major names, T. Rowe Price, Vanguard, whatever, and you know, all of these companies are good. All of these companies have good funds, and the way I always look at these is that you want to compare funds based on their 5 and 10 year track records. Looking at 1 or 2 or 3 years, that's really not going to help you, because this is, again, a long-term vehicle that's going to be invested in the stock market over the long term. So I always just look at the 5 and 10 year, and I look at what are the highest, which funds accomplish the highest returns, and those are the ones that I usually put the money into. Now, that's one way you can do it. The other way is a self-directed IRA, which you would be selecting largely individual stocks or index funds. This is a good way to do it if you have the expertise and you have the interest. You can do it this way, and you can do very well over the long term. The other way is just investing non-retirement income or non-retirement type funds, just extra money that you have laying around or in savings, and invest in the stock market. Now, there's a lot of people doing this, a lot of people involved in this. I have expressed the view on previous videos that for most people, the best way to do this is through either the spiders or through other types of index funds. The technology on this side of the business over the last 25 years has advanced to the point where there is literally no reason why anyone can't invest their own money into these different either sector funds. There's the S&P 500, there's the NASDAQ, there's the Dow. You can invest literally in any sector in the stock market, meaning industrials, technology, literally any sector of the market you can invest in, and you will get exposure to that particular sector of the market. Now, another thing I'll tell you is I don't believe in having a financial advisor unless you are extremely wealthy. When I worked at JP Morgan, their minimum investable portfolio amount was $10 million, okay? And, you know, if you're busy, if you don't want to be dealing with it and you don't mind paying somebody, you know, maybe as low as $3 million of a portfolio you could justify having a manager take care of your portfolio and pay them. But really, the way things are today and the options that you have to manage your own money, there is really no reason why the average person cannot invest in these index funds or spiders or what have you and get just as good a returns as any money manager is going to give you, and the fees you will pay will be much lower, if not almost non-existent. Another way of accessing the stock market, of course, is trading. I don't recommend trading for people who are not like totally into the stock market and want to spend a lot of time thinking and analyzing stock trends and things of this nature. My experience with trading is that you can make a lot of money with trading, but it's just a matter of time before you're going to give back a lot of money. I do not recommend trading unless that's like your thing and that's really what you want to do. I'm also very down on day trading. I have never met a billionaire who is a day trader, or even a multi-millionaire who is a day trader. Most day traders lose money, so don't get taken in by it. If it were that easy, everyone would be sitting at a computer all day just trading. So be careful on that. And the last area which I think merits suggesting or talking about is options trading. Most people think of options trading as extremely risky. There are certain strategies which are far less risky and are actually conservative. And this all involves selling options, not buying options. Buying options is extremely risky, and very, very few people can actually make money over the long term. And I would argue that it's largely a zero-sum game. You can make a ton of money buying options, but you will at some point lose a ton of money. And over the long term, there's a lot of very smart people trying to do this, and over the long term, I believe it is a zero-sum game. I have tried it, and that's the way it's turned out repeatedly for me. However, selling options, the probability is on your side because most options expire worthless. So probability-wise, there are many option selling strategies which make sense as an income source, and they are worth looking into. And that is another area that I will probably do an entire video on at some point in the future. But for most people, options are too complicated and something that they generally should not get into unless, again, you want to put in the time to figure it out and really know what you're doing. Now, the third area I want to talk about is to buy or start your own business. Now, why do I say this? I say this because just like real estate, the tax code is set up such that it is very, very advantageous to somebody for them to either own or start their own business. Now, why would the government do this? Why would the government make it so attractive from a tax standpoint to individuals to start their own business? Well, the answer is pretty obvious, and the answer relates to the reason why it's very difficult to become wealthy working for somebody else. The government wants you to risk your capital and start a business or buy a business and grow that business so you can create more employees that can pay taxes on a W-2, because that's where they get most of their money. Now, in 2017, the government passed the new tax law, which put into place even more incentives for individuals to start businesses. Things like accelerated depreciation, things like special ways for people to deduct various expenses from their income, making owning your business even that much more attractive as an income and a wealth producing mechanism. And it's why, if you look around among people that you know, generally people that own their own business and are successful at it are some of the richest people that you will ever meet or know. And the reason is that you can legally shelter a lot of your income and write off a lot of expenses which ordinary people who are working on W-2s cannot write off. And when it comes to this area of having your own business, either starting or buying, I recommend that you pick an area that you are very interested in. Do not go into something just because you think it's going to be lucrative or because you think you're going to make a lot of money. You really have to be really into what you're doing. You have to be passionate about it, and it's got to be something that you really enjoy. You got to want to get up every morning and just hit it and take on all the challenges of a business, and you got to really enjoy it. Now, I believe that everybody, regardless of who you are an expert at something. There is something that you know about, and there is something that you are an expert at that you can teach other people or that you can apply to other people to improve their lives and create value in other people's lives. If you think about it, creating value for other people and creating value in the world is really the only way that you make money. Money is a byproduct of the value you create in the world. So from that standpoint, I recommend that you pick an area not only that you have expertise in, but that you really love. I'm going to put some resources below this video that you can look at, other videos that I've done on related topics and other things that I think you'll be interested in that relate to what we've talked about here. What I'd like you to do is I'd like you to take a look at these two videos that are coming on the screen right now, and take a look at these, because these are going to add additional information that relates to what I've talked about on this video. And as I said before, there's going to be some more videos that are coming out very soon that are going to relate to these and more topics.